Ladies and gentlemen, good day, and welcome to the Q4 FY26 earnings conference call of Supreme Petrochem Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Purvangi Jain from Valorem Advisors. Thank you, and over to you, ma'am.
Thank you. Good evening, everyone, and a very warm welcome to you all. My name is Purvangi Jain from Valorem Advisors. We represent the investor relations of Supreme Petrochem Limited. On behalf of the company, I would like to thank you all for participating in the company's earnings call for the fourth quarter and financial year ended 2026. Before we begin, let me mention a quick cautionary statement. Some of the statements made in today's earnings call may be forward-looking in nature. Such forward-looking statements are subject to risk and uncertainties, which could cause actual results to differ from those anticipated. Such statements are based on management's belief as well as assumption made by and information currently available to the management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings conference call is purely to educate and bring awareness about the company's fundamental business and financial performance for the quarter under review. Now let me introduce you to the management participating with us in today's earnings call. We have with us Mr. Rakesh Nayyar, Executive Director and CFO, Mr. Dilip Deole, Chief Executive of Finance and Accounts, and Mr. D.N. Mishra, Company Secretary. Without any delay, I request Mr. Rakesh Nayyar to start with his opening remarks. Thank you, and over to you, sir.
Thank you, Purvangi. Good evening, everyone. It's a pleasure to welcome you to the earnings conference call for the fourth quarter and the financial year 2026. We'll give you a brief overview of the performance for the quarter ended 31st March. On a standalone basis, the revenue from the operations for the fourth quarter stood at rupees 1,587 crores, reflecting a growth of 3% year-on-year. The fourth quarter is typically a strong quarter for the company, supported by seasonally higher demand generally. The performance during the quarter was driven by higher volumes and better spreads. Styrene monomer prices remained stable during the quarter except when it witnessed sharp jump in the month of March. The operating EBITDA stood at INR 253 crores, reflecting a growth of 75% year-on-year, with operating EBITDA margins improving to 15.9%. The total EBITDA was at 264 crores, including the other income. The net profit after tax stood at rupees 168 crores, with a PAT margin of 10.59% for the quarter. For the financial year 2026, the revenue from operations stood at INR 5,338 crores. This is reflecting a decline of 11% year-on-year, primarily on account of lower average styrene monomer price during the year. Average styrene monomer prices were lower by around 17% compared to the previous year, which resulted in lower realizations despite nominal volume growth. The operating EBITDA stood at rupees 515 crores, with the total EBITDA being at 558 crores, with a margin of 10.37%. and a net profit margin at 327 crores with a margin of 6.13%. On the operational front, the sales volume of manufactured products increased to 1,664 tons in quarter 4 2026 as against 95,556 in quarter 4 25, reflecting a growth of about 5.4%. For the full year, volume stood at 363,203 metric tons as compared to 355,967 metric tons in last year, reflecting a growth of about 2%. Demand from OEM segments remained healthy during the quarter, while non-OEM segments witnessed some softness and capacity utilization for the year remained healthy at over 80%. The volumes here are reported are net of approximately 14,000 tons of the internal products being transferred and consumed internally for compounding and in the use for XPS insulation board, and hence are not included in the external sales volumes. On the raw material front, styrene monomer prices remained largely stable until February 2026 within a range of plus minus 10%. However, prices increased sharply in March 2026 following the West Asia conflict and disruption in supplies through the Strait of Hormuz. Styrene monomer prices rose from around $1,000 per dollar prior to the conflict to a peak of approximately $1,650 ton and have since moderated to around $1,500 per ton. While the shipments from the Middle East were impacted during the month, company was able to meet the domestic demand through sufficient inventory material in transit and sourcing from alternate geographies. Adequate arrangements have been made to ensure raw material availability going forward in the coming months, and the situation will ease only once the normal shipping through the Strait of Hormuz resumes. With regard to our CAPEX projects, manufacturing operations of the mass ABS plant have restarted with modified arrangements and are currently operating at around 65% of the design capacity, pending restoration of the impacted equipment. The product has been well accepted in the market, and we are pleased to inform that the EPS Phase 2 expansion project at our Nagothane complex was successfully commissioned on April 14, 2026, enhancing the ABS capacity from 85,000 tons per annum to 115,000 tons per annum at Amdoshi complex. On the balance sheet side, the company continues to remain debt-free with an investable surplus of rupees 700 crores as at the end of March 2026. All capital expenditure continues to be funded through internal accruals. The Board of Directors has recommended a final dividend of rupees 8 per equity share, along with the interim dividend of rupees 2.5 per share declared earlier. The total dividend for the year stands at rupees 10.5 per equity share of face value of rupees 2 each. With this, I conclude my opening remarks. We are now open to the floor for question and answer session. Thank you. Thanks for the
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. A reminder to all, you may press star and 1 to ask a question. We will take the first question from the line of Aditya Khetan from Smith's Institutional Equities. Please go ahead.
Yeah, thank you, sir, for the opportunity. So just a couple of questions, and congrats on a good set of numbers also. So my first question is it possible to quantify the inventory gains in this quarter, or a ballpark figure if you can give? And consequent to this, sir, suppose if the situation into the West Asia stabilizes, when are we expecting that to come to an end, and subsequently in inventory losses if we would take, so that would be booked in Q1 or Q2? Any sense on that, sir?
It's very difficult, very difficult to estimate the gain or the inventory gain or inventory loss at the moment. Because even in the month of April, in the month of March, when the prices of the raw material increased and the shipments which were to be loaded, they were stopped. So some consignments had to be arranged at very high prices. So it's very difficult to estimate that. And going forward also similarly, when the situation normalizes and our inventories on the high seas or inventories on the stock here, what losses prices will happen, nobody knows. It's very difficult to assume. Because the last month the prices were at $1,650 a ton, and today they are ruling around $1,500 a ton. So this is something which is very dynamic, and estimating this is it's very, very difficult, rather next to impossible at the moment.
Okay, got it, sir. So follow on to this question. So suppose if the prices stabilize at these levels, how you see the demand from the end user industries? Are OEM still on their way to make contracts at these higher prices, or they are waiting so that prices come down and then they start buying off the finished product? Any idea on that, sir?
The OEMs are buying, but then we are not entering into contracts at the moment because the situation is so fluid that what assumptions to be made now in the current scenario for the raw material pricing and the other expenses to be incurred to procure the raw material. The shipping costs have gone up, the freight costs are up, so it's very difficult to assume. And so we are, and the OEMs, we have agreed that we will be doing contracts once the situation normalizes. Secondly, as far as the demand is concerned, the demand from the OEM sectors is good, but the non-OEM sectors, the demand has taken a big beating at the moment, particularly because, one, the prices are high, two, the labor is also not available. The people have gone back, the contract laborers and all, they have gone back to their villages or some places. And thirdly, for some processing you need gas, and gas is not available to the industry or some short supplies, so people are not available. The demand is low there.
Okay, got it. Sir, what would be our raw material cycle? So, or how much inventory we keep in the pipeline? And secondly, sir, if you can quantify also how much are we procuring styrene monomer from Gulf countries versus China versus US?
I can only suffice to say that as far as domestic market is concerned, we will continue to meet the demand, and we are meeting the demand. What geographies we buy, but we will buy, we will source the material, and we will meet the domestic demand. That is our focus right now, and all our customers are being supplied the raw material, the material as and when they require it.
Got it. So coming to ABS, sir, as per our latest filing, that the capacity design has been modified to make at 65% of the rated capacity earlier. So is this the new normal, or so the 65% can go to 100% as and when, so that technical failure will be resolved?
Once the failure gets resolved, because that equipment which failed has been isolated, and the collaborators have provided us some alternate arrangements by which of the original capacity we can operate at 65%.
Got it.
Okay.
And so this
our capacity, which was 70,000, for the time being, it is now reduced to say 45 to 50,000 tons.
Got it, sir. Got it. Sir, into the presentation, we have stated so 14,000 tons of mass ABS we have produced, and we have used it for the compounding. So this 14,000 tons of ABS has been manufactured in the month of March only, right, sir? So 14,000 seems a good figure, some 20% odd utilization.
We have not said 14,000 tons of ABS. What we have said is polystyrene and ABS.
Okay, so combined it is
14,000 tons, which has been produced and transferred to our compounding for further processing and compounding purposes. So that is when we look at our total capacity or the sales. So that is this is our sales numbers. They don't come because they are an interdivisional transfer. When you look at our sales volumes, so that is net of these sales volumes. Though they have been produced in our other units and consumed in our compounding divisions.
Got it, sir. So just one last question. Sir, any target volume guidance for FY27 for base volumes as well as for ABS separate, sir, if you can give me?
I have only one volume to give, and if the normalcy returns by June second quarter onward things are normal, then we expect that with the ABS operational, we should be able to do 8 to 10% volume growth this year.
But that seems low, sir, like considering ABS also is now started at 65% plus base business volumes of EPS. That number looks slightly lower side.
Because the first quarter, we don't know where we are at the moment.
Okay.
That too also is what I'm saying is subject to the complete normal situation being there from the second quarter onwards. Exports also, you can send exports to Europe today only the Cape of Good Hope. The shipping times have increased, the freight rates have gone up, so it is not the normal business conditions as far as that part of the world is concerned.
Sorry to interrupt in between, Aditya. I would kindly request you to rejoin the queue again for more questions. Thank you. We will take the next question from the line of Rahul Agarwal from Ikigai Asset Managers. Please go ahead.
Hi, sir. Very good evening. Thank
Good
you
evening,
for the
Rahul.
opportunity and good set, sir. In a challenging environment, good numbers. Just starting with a couple of questions. Firstly on pricing and then on sourcing of raw material. So on pricing, sir, for ABS and polystyrene both, what is the import price right now we're getting quotes for? Like typical from an Indian industry perspective. And when we compare that to what a Supreme sells on March ABS or polystyrene, is that import parity pricing or because the rupee is depreciated? So is it similar? Is there a large difference there?
For the commodity grades, the base price is always the landed price here of imported material. Then you add your little premiums here and there and the costs involved. So for the commodity, the base for the price decision is the landed price. But for the value-added grades, then the price differential is entirely different. There are different calculations for that. And as far as the price or the imported material coming in, we have not heard of any PS imports coming in or booked recently. So I can't comment what prices the PS now will come if already booked in the month of March or April. ABS, we heard that some imports have been booked at $2,300 and $2,400, and they may arrive now in May or something. So early March we had heard when the West Asia started that the polystyrene at $1,650 or $1,700 was booked. So they would arrive sometimes in May. But the Indian prices, as far as the commodity grades are concerned, they're generally in line with the landed prices plus the costs involved here.
But sir, so I should assume that polystyrene, whatever the Indian pricing is line with what $300
Yeah,
plus.
that's right. Commodity grades, of the general grades, yes.
Which basically means that on a quarter-on-quarter basis, we want to see polystyrene right now selling at what price? Sir? Almost like 170, 180 rupees a kg.
Around different, depending upon grade to grade, around thereabout.
Got it, sir. So moving ahead on the raw material side, similar question. You mentioned styrene pricing, right now spot at $1,500. Is it like whatever inflation we have seen on raw material, and you also mentioned you're not booking new contracts with OEM. There's going to be more spot sales, I think. Should I assume it's 100% pass through and customers are okay buying, at that higher price, and there is no hit on margin? Is that fair?
I said to the gentleman Aditya that the non-OEM market demand is dented at the moment. It's subdued because of the high prices. So it has impacted the demand. As far as OEMs are concerned, because it's the season for them, so they are buying. but then it's at the increased prices only. And it's not that we don't want to enter into a contract with the OEMs. The OEMs have been our old partners, and we have been engaging with the OEMs from beginning, and we supply to practically all the OEMs in the country. It's only that the situation is so fluid in terms of the raw material prices, the freight costs, and other attributes which we consider, that it is not fair to do a contract at this moment. And maybe once the situation normalizes, then we will enter into our regular contracts with them.
But, sir, and last question, then I'll get back in the queue. On the raw material sourcing side, when I look at the balance sheet, right, I mean, at 600 crores of inventory, it looks pretty stable on a YOY basis in terms of days of sale. Don't really think that companies actually stock more material. Anyway, the supplies were impacted in fourth quarter. Going forward, you mentioned you will ensure that domestic demand is completely met 100%. Could you just elaborate on this sourcing part? Where are you getting styrene from? And, incremental pricing, how should we look at it?
The incremental pricing will get passed on to the consumers here. Only except when the prices really start dropping, then we may have an inventory loss. It's all a play of market supply and demand today. And as far as the sourcing of material is concerned, we source some from Asia and some from China at the moment.
Got it. Very clear, Rakeshji. I'll get back in the queue. Thank you.
Thank you.
Thank you. The next question is from the line of Manish Oswal from Nirmal Bang Securities. Please go ahead.
Yes, sir. Thank you for the opportunity and good set of numbers. Sir, I have only one question about the Haryana capex thing. Can you update what is the status and how, and what is the capex plan for the FY27, sir?
No, as far as Haryana is concerned, because the IOC's styrene monomer plant is delayed. So as far as our polystyrene or EPS our projects are concerned, so we are not committing any expense for that at the moment. We are going to spend some money, but that will be more on the infrastructure and on the other related activities. Because once we have more clarity on the IOC's SM plant commissioning date, then only we will put in the big monies for the PS and EPS. Otherwise, we are planning to do some work in regard to the other units there this year.
And the capex for the F27, sir?
For the year, I don't have the separate numbers for Panipat, but for the year, for the company as a whole, we will be doing around 250 odd crores.
All right, sir. Thank you very much.
Thank you. The next question is from the line of Nirav Jimodia from Annual Wealth. Please go ahead.
Yes, sir. Good afternoon and thanks for the opportunity. So, a few questions. So, first is on the consumption of ABS and PS. So, ABS on a monthly basis, we are close to around 26,000 tons. Some months maybe higher also. And for PS, we are currently close to around 30,000 tons a month. So, you mentioned that the OE demand were impacted during the quarter because of the reasons you mentioned on. If you can just help us understand what could be the demand coming from the non-OE sector out of this total consumption of PS and ABS on a monthly basis, some understanding, sir.
I said the non-OEM market was impacted.
Correct.
Particularly in the month of April, not till March.
Correct.
In the month of April, the non-OEM market demand is impacted. And as far as the division between the OEM and non-OEM is concerned, I would say for both categories, you can take roughly around 50-50 or 45% for OEM and 55% for non-OEM.
Correct. So since 55% of the demand which was impacted, is it possible to give some quantum in terms of how much it would have reduced? So let's say on a base of 100, which it was pre-war, how much it would have fallen in the month of April and May?
to estimate that, too early to estimate that, because it's now in April only it started.
Correct.
And particularly now. So once the quarter closes, we'll have better numbers then.
Correct. Sir, you mentioned about the styrene sourcing, like when we see the global map, let's say consumption of around 32, 33 million tons of styrene, and by China, global consumption, where China is close to around 18 and we are at around 1.5 in terms of the global consumption. So when we see the upstreams of styrene, let's say benzene and ethylene, or let's say slightly above that to naphtha, even China is importing everything. So how they've been able to manage in terms of their captive consumption of styrene and also have some exportable surplus which could come to us, A, and B, if you can share your similar thoughts on acrylonitrile, because then for ABS this becomes a very critical raw material. So from where the ACN part is currently coming from?
Yeah, as far as ethylene and benzene is concerned, China is not fully dependent for this. They have their own internal production. Some part of it they are dependent on it, but then they are in any case were till now buying the crude from Russia as well as from Iran. They were able to take their crude oil. So they have some difficulties there, but then to that extent their installed capacity was 18 million tons, but their own consumption was not 18 million tons of styrene monomer. It was less. And so they are able to, at least what surplus they have now by ramping up of their capacities, they are able to meet some part of the demand.
Correct. And sir, for the ACN, if you can share your thoughts.
Sorry?
Acrylonitrile.
ACN, we have not faced any difficulty till now. We have our own sufficient stock with us, and some supplies were in the pipeline. They have come for us, and going forward also we are getting it right now. We are getting it from the other geographies.
Correct. So last time in our conference call you updated about onboarding some larger customers for X-Mold, and you also mentioned that one of the bigger OEM, which was like a third OEM, we had a good discussion which probably could come on board with us. So if you can help us understand, like, has that customer been onboarded, A, and B, how do we see the X-Mold volumes picking up in FY27? So first, if you can share your thoughts on the utilization part in FY26, and how are we seeing FY27 for X-Mold?
The OEM customers which we said in the last, they are there on the board. We are getting some orders from them. And the third one was an automobile one, which again our material is going to their tier one, the supplier for the automobile company. So that has been on a regular basis it has started. So as far as customer induction is concerned, that is going on there. Now volumes are concerned, after the all streamlining and cleaning up there, now we expect this year we should be doing 50 to 60% more. Like last year we did utilization of close to only, much is that, around 50% or rather 40-45% of their overall installed capacity.
Okay.
And this year we should be doing close to say 70% of that capacity or 65 to 70% of that capacity.
Perfect, sir. So last question from my side. What was the trading sales in quarter 4 of FY26?
Trading sales?
Yeah, so like we reported close to around 1587 crores of turnover this quarter. How much of it was trading, out of trading of the
generally, roughly, it will be around 18% or so in this quarter.
Sorry, sir, I missed your point.
Around 18%.
Okay, so 18% was the trading sales.
18% would be there in this quarter or so. Even for the full year, trading has come down now this year, and it will be close to the same level of 18 to 19% only.
Got it, sir. Thank you so much and wish you all the best.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. We will take the next question from the line of Abhijit Podwal from DR Choksi. Please go ahead.
Good evening, sir. Thank you for taking up my question. So most of my questions have been answered. So just one question from my side. So, sir, given that the phase 1 is now running on for the ABS, and what is the current thinking of on phase 2 expansion? Like, is there any timeline or utilization milestone you are targeting before committing to it? And separately, what's your thought upon competition from ABS imports coming in from Taiwan and Korea? Like, are these imports competitive on price versus domestic products? Thank you.
The imports have been coming. Imports will continue to come because the domestic capacity is far lower than the actual demand in the country. So the imports is not a concern at the moment. As far as our own capacity utilization is concerned, as I said, that we are currently, after the modified arrangement, at 65% of the original rated capacity, and we expect that we should be able to do close to 85-90% or 80% of that capacity utilization this year now. As far as the second line is concerned, we are working on that, and that is irrespective of the fact that what has happened here as far as one piece of equipment is concerned. But then we are working on the second line.
Okay, sir. That's it from my side. Thank you so much. And all the best.
Thank you. We will take the next question from the line of Sailesh Raja from B&K Securities. Please go ahead.
Yeah, sir, I joined the call late. Apologies if this has already been answered. Sir, with styrene monomer prices currently at elevated levels, USD 1,500. So how are you approaching, the procurement decision, especially considering our typical inventory holding of, 2 months? So in this environment, would we look to reduce inventory days in anticipation of your price correction, or continue procuring at higher prices and rely on pass-through mechanism with customers? So could you please talk about that?
No, we are procuring. Of course, the regular suppliers are not available. Procuring itself is a task today. Mm-hmm. And we are right now balancing the material available with the demand here, and we are concentrating mainly on meeting at least the domestic demand. Mm-hmm. And we are aware that because some inventory loss might come the moment the whole situation normalizes, the prices drop, and that dropping will happen where it will be a sharp drop. Mm-hmm. So as and when it happens, there will be some inventory loss to us. Mm-hmm. And we are trying to find ways that we are able to contain that. If as and when it happens, then we are able to contain those losses. So all kinds of things we are doing in terms of even passing through the extra costs, sourcing the raw material matching it with our requirements or the domestic demand. So efforts are on towards that.
Okay. Sir, given the current raw material supply constraint affecting some polymer players, so do you see scope for faster customer approvals for new grade in the SPC X-mold division for us, considering that such approval typically it will take a year's time? So how do you see that?
No, it's happening. We have not faced any difficulty there, but OEMs will take their own time. This is not the case with the OEMs. But the non-OEMs earlier also were not taking very long, and we are not facing such thing at the moment.
Okay. Sir, in the SPC division, could you elaborate on specific initiatives that we are taking to increase the volumes and also the potential, the cross-sell products through X-mold existing automotive customer base And also, by when do you think that we can reach? Yes, sir.
We are not doing any cross-sell in the sense we know that all styrenics mold compounding is being done by us. And we continue to do what we were doing, but then they are since more on the only good thing there is that they were never an appliance compounding company. But now with Shiricity being there, and lot of OEMs are there in Shiricity, air conditioning companies are there in Shiricity, so they are also focusing on the supplies to air conditioning guys and other OEM guys, and they have been successful in onboarding two of the AC manufacturers there.
Okay, great, sir. So by when we are expected to touch 50,000 volumes in SPC division, SPC and X-mold?
So maybe it will happen this year or next year, because ABS compounding is going through that. Now we have started doing ABS compounding in a little bigger way than what we were doing earlier. So that is my next question, sir. Our compounding volume should see a jump this year. So we hope that by, if not in FY27, but FY28, we should be certainly at 50,000.
Okay, great, sir. Sir, one last question. So in ABS, why we are targeting around 36,000 tons of volume in FY27, could you clarify how much additional demand we expect from our internal consumption, sir, particularly from SPC, X-mold division? And also wanted to know the PBT break-even capacity in ABS.
How much we will supply to our own internal consumption is very difficult to predict, because based on what the ABS compounds, because we are going to start now the ABS compounds, and the again acceptability, the new customers coming in, approving the grades, very difficult to say that. But yes, we would be increasing our focus on that. So, and in any case, the X-mold is not in the ABS compounding at the moment.
Okay, sir. Yeah. Okay, sir. Thank you, sir. All the best.
Right.
Thank you. We have the next follow-up question from the line of Aditya Khetan from Smith Institutional Equities. Please go ahead.
Thank you, sir, for the follow-up. Sir, my first question is on to the polystyrene. It has been, sir, 4 years when we have last debottlenecked the capacity, and we are also nearing about 85% utilization, almost near peak. Any plans, sir, to further debottleneck that capacity?
Yeah, we are. Actually, we did not debottleneck 4 years back. We set up a new line altogether 4 years back. 2020, 3 years back, we set up a new line, and now we are evaluating the debottlenecking.
And this will be done by, sir, FY27, 28?
I just said we are evaluating. I can't give you a timeline for that.
Got it. Sir, onto the spreads part, if you can update, like, what are the current spreads between polystyrene and SM, pre-war and today, and where you see the trajectory going ahead?
You are asking something which is very difficult to answer even, because the way things are globally, it's first is getting the material is the concern. It's not that what margins are there. Getting the material itself is a concern at the moment. But then, the delta will not sharply increase. The deltas, which were earlier closer to, say, for GP for 200, they have moved to closer to 275 or so for GP.
Okay, $270 per ton for GP. Okay.
75, thereabout, maybe some some transactions may have happened at a, depending upon every day the prices are changing now. The situation is very fluid. You can't really define what delta. There is no standard thumb rule that this will be the delta now. So the prices are changing, varying every day. Today the styrene is say at $1,500. So the $1,750, $1,800 could be for the landed cost of polystyrene GP in India, closer to that. So 275 you can assume.
Got it. So my third question, inventory gain benefit has been booked in this quarter, or subsequent quarters also we'll see some benefit?
We don't have some inventory gain as a specific entry. As and when material comes in, it gets sold. So whatever loss profit comes in, it gets booked in the business. So there is nothing such that the inventory gain has to be booked or inventory loss is to be booked. It is the transaction happening, material has come in, we have sold it, whether I made loss or gain, it is there in the balance sheet, it is there in the accounts.
Got it. So my next question is onto the ABS. So onto the phase 2 ABS. So that is planned by FY28. Considering, sir, the phase 1 also we are operating at lower capacity. Any idea, sir? Phase 2 will come by FY28. Are we sticking onto that?
As of now, yes, we are still aiming that only. Baki, as far as the capacity is concerned, there's enough demand in India. Not that we had an unfortunate incident that one of the critical equipment had developed some snag. So, and that has become something serious because it has to be removed and then repaired, and it's a time-taking process. But then our collaborators have at least found an alternate arrangement for us for which we are able to operate at 65% and which we are doing now.
Got it. So just one last question, sir. So the recent government decision to remove the import duty on ABS, are we seeing, sir, some good imports of ABS are coming in, and because our samples are also now into the market, how are competitive versus imports coming in onto pricing, onto the quality front?
Right now, as I said, very difficult to compare because whatever material is coming booked in the month of March, that March prices were ruling at $2,400 for ABS. So if that comes in today, with duty or no duty, the landed price of that itself will be 230 rupees then. At the current dollar of 95 rupees, it will be at 230 rupees a kg there. So and plus expenses. So the local prices are less than that. So there is no threat from the competition as far as imports are concerned in terms of pricing is concerned.
Got it. Sir, directional wise, sir, if you can just say, like for FY27, because so new capacities of ABS and EPS have come in, so some higher cost from that, and consequently, assuming if this war situation stabilizes, so prices are anticipated to come down. Are we, how you see the directionally wise EBITDA for FY27, can we maintain onto that number of FY26, or it could be slightly lower? Any directional wise, sir, just asking.
EBITDA wise, I presume that for the remaining, if I have to see the first 3 months, I can't predict anything. If situation normalizes, then in the normal circumstances, we should be doing, because the volumes will be better, so we should be doing better than the last year.
Better than last. Oh, got it. Thank you, sir. That's it.
Thank you. We will take the next question from the line of Pritesh Chheda from Lucky Investments. Please go ahead.
Yes, sir, just one clarification, couple of them. So on your pricing, which you mentioned, about $2,200 of ABS booking, so this is material to arrive in May, or this is the material which arrived in March?
I said the material which was booked in March, that is what we heard. We have not bought, but we market information is that material booked in March was for at $2,300, even $2,400. So that arrival may be now in April, may arrive in May. If arrived in April also, it will get sold in May.
Okay. So booked in March was $2,200, and then you mentioned a number of $1,600. That was booked in?
That is the styrene monomer price I mentioned.
Okay. The other thing is, sir, considering, so one of the comments you mentioned that it's an ongoing business for you, and on the inventory question that you answered to. So is it fair to assume that what we see as the profitability in quarter 4, a large part of the profitability is an ongoing profitability without any material inventory number flowing into that operating number?
Sorry, I couldn't get you.
So the observation is, I think there is some disturbance. Wait a sec, I will just remove my hand. Wait a sec.
Yeah. So to one of the question you answered about normal nature of the business being we buy inventory and we process it and sell it during the quarter. So is it fair to assume that the quarter gone by doesn't have any major M2M on account of inventory flowing into the P&L?
No, it's a process. See, whatever material has come to me, I process, I got increased price maybe, but then I bought also higher price material also.
Correct.
I have supplied even when the market was high. I have met some contractual commitments which were in the month of March. When prices were skyrocketing, we even met our contractual commitments which were at the old prices. So Correct. It's a part of business. I can't segregate into the pockets that what consignment came and what price it got sold or something.
Okay. The other question is it fair to assume, and based on your experience, when you have these raw material supply crunch, typically in the system, whereby you have a higher material price flowing in, so materially the profitability of the business is higher, usually versus a scenario which was last year, let's say, where you had a continuously falling styrene price for the first 9 months. So, a higher styrene price automatically brings in a slightly better profitability. Is that assumption correct?
There are two ways to look at it. The higher price of styrene, if it leads into a better spread as far as polystyrene is concerned, yes, then it is beneficial. But then it generally doesn't happen because higher styrene monomer prices kills the demand. Particularly the sectors which can wait, or particularly the people who will start going and looking into their pockets and saying, whatever is the old material, let me consume that. The warehouses, the supply chain will rather get emptied there. So the material doesn't get sold there, and you are actually, you'll end up holding the old stock, which is high price stock, and if the prices go down, it finally leads into an inventory loss also. So too much of high price does not guarantee that there will be better profitability. It kills the demand also.
But in a scenario like this, based on your experience, where shortage of material is throughout the globe, is it a favorable scenario generally for, so let's say there were imports happening into the country. So I'm assuming supply chain globally are seeing the petchem related supply shocks. So it's a slightly favorable situation in terms of profitability. Is that correct, or even that assumption is challenged?
There is no import duty on the imported raw materials or imported polymers also, be polystyrene or ABS or SM. There's a zero duty. SM already was on zero duty from all the FTA countries, but then there was a duty on PS and ABS. So rather, to that extent, their import cost goes down now. And as far as the global shortage is concerned, but then again, as I said, that the non-OEM sector, the market has already shrunk. April itself, we are seeing now that the market is shrinking as the non-OEM sector is concerned.
Okay.
So the prices which went up in the month of March, the prices are coming down. Of all polymers, substantial decrease in prices have happened because people want to push their material, and whereas there is no demand coming in.
Okay, sir. Okay. Thank you very much, sir. I'll get back if I have more questions, sir. Thank you.
Thank you. We will take the next question from the line of Rahul Agarwal from Ikigai Asset Managers. Please go ahead.
Yeah, hi. Thank you for the follow-up. Rakeshji, one question is, for the mass ABS segment, assuming whenever we ramp up to 70,000 tons for the phase 1, and you said the market is about 50-50 on OEM, non-OEM, what would be a preferred mix for us? Like, what would we want to do eventually with the capacity?
We would like to be present in all segments. Like in polystyrene, we are in all the segments. We are with all the OEMs. We are there for all the non-OEM guys also. So we would like to be there. It's not that I will be only looking at it. It's only that in the OEM segment, the process to get your grades approved and acceptance process is longer. So till that happens, we would be in the non-OEM segment. The moment that happens, we will be in OEM sector also.
Right. So it largely should reflect the industry mix, right? It should be like 50-50 overall whenever we reach to 40,000.
Eventually, going forward, once the grades are totally established in the market, we are fully operating, and then that's the scenario we will have.
Got it, sir. And sir, second question was on the operating cash flow. Look at the cash flow statement. I see, a bit of higher working capital investment, largely driven by higher debtor, 520 crores as of 31st March. What has changed over here? How should I read the operating cash flow generation?
The prices of our selling prices, our purchase price, everything went up in the month of March. So the selling prices being higher, the debtors numbers will go up, plus ABS has come in, so their volume numbers will go up. Inventory is concerned, not only the polystyrene inventory is there, but ABS inventory has also come in. So all that adds to that.
All right, got it. So basically, going forward, sustainable basis, 30-35 days of receivable cycle, is that fair to assume on a consolidated basis?
I know that our net working capital has gone up there because of the increased prices, increased material which has come in, ABS material has come in. So, but then once these things become normal now, they will go back to where we were earlier.
Got it. Got it. Thank you so much, sir, and wish you best of luck for fiscal 27. Thank you so much.
Thank you, Rahul.
Thank you. We will take the next question from the line of Nirav Jimodia from Anvil Wealth. Please go ahead.
Yes, sir. Thanks for the opportunity again. So two questions. So first is on the specialized grades of PS. I guess they were also imported into India, and because of all this crisis which we are seeing, possibly that specialized grades would be restricted in terms of coming to India. So have we seen the premiums for those specialized grades expanded in line with, you mentioned, for GP? And B, how our volumes have moved for the specialized grades in the month of April for that particular applications?
Well, I don't know which grades you are talking about, because
No, sir, we produce some specialized grades. So in one of the earlier calls, you mentioned that those grades command premium over the normal grades.
You are talking about some imports happening.
Yeah. So there are some specific grades which are for higher end refrigerators or washing machines. So
they are the ones. That is if they have been imported, they certainly would be at much higher price than the normal commodity grades. There must be a difference of almost $200 plus there.
Correct.
But looking at the import data, the grades which have become for the specialized polystyrene grades which have been imported, they would be at a price of at least an additional price of $200 would be there over the normal grades imported by others.
Correct. So I just wanted to understand, do we have presence in terms of volumes for those specialized grades
We are there. We are in all kinds of refrigerators and AC grades. Practically every maker of refrigerator uses our polystyrene.
Correct. So to that extent, that benefit would also accrue to us whenever those users...
That is what we talk about, the value-added grades every time.
Correct. But I just wanted to understand in terms of the expansion of the premium part, which you rightly addressed. The second question is on the EPS part. Like if we see the demand for India was close to around 150,000 tons. So is it also very price sensitive in terms of from the consumer point of view? And also if you can share your thoughts in terms of how are we seeing the growth in EPS since we have expanded the capacity in FY27?
The EPS is price sensitive, every product is, but then at the lower end, yes, but then for the packing segment, for the construction segment and cold storages, the demand has been great. It has increased last year. They are the segments from where the demand growth came in. As far as the capacity increase, what we are seeing, we have to target more of the construction side of it, including the cold storages also, and 3D panels. So we expect going forward the demand would increase in these segments, and we will be able to supply plus export market. Because our grades have been approved in the Europe, and during the peak months we were finding that we are not able to meet the demand there. We can't supply because we have to supply to the local market. So this additional capacity will help us in starting our exports of EPS.
Correct. So safe to assume that at least in line with the volume growth guidance which you mentioned, similar volume growth could be possible in EPS also, like on a consolidated basis for the company as a whole.
We have said that we will, along with the market growth of this year, we will also grow this year. But then all the volumes put together, depending upon the global situation, the war situation, if everything becomes normal by June end and July sees the normal behavior in the global market, we should be doing 8 to 10% volume growth this year.
Perfect, sir. Perfect. Thank you so much.
Thank you.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. Ladies and gentlemen, as there are no further questions from the participants, we now conclude the question and answer session. I now hand the conference back to the management for closing comments. Over to you, sir.
Thank you all for participating in this earnings call. If you have any further questions or would like to know more about the company, please reach out to our IR managers at Valorum Advisors. Thank you so much. Thank you.
Thank you, members of the management. On behalf of Supreme Petrochem Limited, that concludes this conference. Thank you all for joining us today, and you may now disconnect your line.